Good morning, ladies and gentlemen. Welcome to the SYN video conference to discuss the results for the fourth quarter of 2023. This video conference is being recorded and the replay can be accessed on the company's website, ri.syn.com.br. The presentation will be also available for download. Please be advised that all the attendees will only be watching the video conference during the presentation. And then we'll start the Q&A session when further instructions will be provided. I'd like to reinforce that the prospective declaration has the beliefs of SYN administration and current information for the material. These statements may involve risks and uncertainties as they relate to future events and therefore depend on circumstances that may or may not occur. Investors, analysts, and journalists should be aware of events related to the macroeconomic environment, the industry, and other factors that could cause results to differ materially from those expressed in the respective forward-looking statements. Presenting this video conference, Mr. Héctor Leitão, CFO and Investor Relations of the company. Now, I would like to give the floor to Mr. Leitão, who will start the presentation. Please, Héctor, you can proceed. Good morning, and thank you so much for being here. I will start my presentation for the fourth quarter achievements. In October 23, we found the asset Suárez Street, a corporate building in Salvador, outside our core region of investment. The transaction was 14 million and 2/3 representing our market share, and is equivalent to 9 million on SYN market share. We were acknowledged one more time for top ranking open course, and this we achieved the 3rd place for real estate services. We are relevant in the real estate market. This recognition from all the players in the market. And after that, the subsequent events, this slide, in February, we announced the swap of assets, exchanging 37.7 of Tietê Plaza Shopping and 37.5 of the company that has 85% of Cerrado, 32% of Cerrado Mall market share. In exchange, we deliver 20%, 30% of JK Towers B&E with funds quota to the other partner. And in exchange, we have financial additional 67 million in cash. And we have a decrease of our gross debt in 60 million. So this swap has a neutral effect, a little bit positive in net debt. And after that, a few weeks later, we announced XP. We sell part of our portfolio, 1,850,000,000. And the transactional portfolio, 51% of Gran Plaza Shopping Mall, 32% Cidade de São Paulo, 7% Shopping Metropolitano, 52.5% Tietê Plaza Shopping. The total of our market share in Cerrado, 85% after the swap, and 23% Shopping Dev. Next page, we are going to see the conclusion of these two transactions and our portfolio with this development. So basically, we have 10% of Gran Plaza, 60% Shopping Cidade de São Paulo, 10% Metropolitano and Tietê, 0 in Cerrado, Shopping the 8.6, and 10% in JK Towers. And it's important to highlight these transactions are about to be fulfilled, precedent conditions. We did not recognize them in the balance, these transactions, so there is no impact in the accrual profit or dividend distributions up to the moment that we concluded this transaction. So the focus is totally on execution, but we have the precedent conditions and transactions like these. Starting operational performance, our physical occupancy was superior than last year, the fourth quarter, 90% occupancy compared to 92.7 last year. The division among malls, 95.8% are physical vacancy. And later on, I will deep dive more information about the malls. AAA buildings, 81% on vacancy, and Class A offices, 86.5%. And what's new on this quarter, we delivered the first part, CLD warehouse in Dutra Highway, excellent location. We delivered this phase one with 51% of rental, and it's an interesting demand to occupy the rest. This portfolio is 7,000 square meters in our participation that we have just delivered. This is the physical occupancy of malls. We closed the quarter 95.8 compare 95.3 last year. So what happened in the year, more than increase of occupancy, was qualification. And later on, we're going to see the impact on sales of the mall with this replacement. And financial occupancy was basically flat compared to the previous year. Talking about sales, we grew 9.5% in the total year, and same-store sales of 6.4% a year. And then, what is the complement of this growth of 9.5% are these replacements that we have been doing. More qualification on the mix, better operators, so the result has better sales. And this replacement represented 3% of growth of total sales, and kiosks and events with a lower market share shower that is robust growth in non-traditional revenue of the company in temporary rentals on kiosks and renting and allocating more operations in the space of the mall. And another line of revenue is merchandise. When you use the mall as a billboard for important brands, the ones that are already in the mall are brands that are not in the retail, bricks and mortar, but we get closer to these brands so we can extract more value from our assets. And rental of same stores, we concluded the year with 6%, and in the quarter, 2.9%. This drop in the quarter, in October and November, there was a higher impact in the electronic appliances and entertainment. This was a punctual fact because in December we see SSS is growing, and in January we see a growth of sales superior to the fourth quarter and rents as well. So it was a punctual drop that we see it's not going to be recurrent. The trend is keeping the robust growth that we presented in 2023. Financial performance now, the result was satisfactory in 23. Starting on the quarter, we closed with 55 billion NOI, a growth of 17%, and in the year represented 200 million NOI, a growth of 11% compared to the previous year. This growth is meaningful because of the malls representing 80% of our results. So in this middle table, we see that we concluded the quarter with 45.8 million NOI, growing 23%, and underneath, in the year, we grew 15.9%, reaching 164 million NOI. So the growth is very robust this year on revenue. Although the GPM was negative, we can reduce the discount because of sales performance. So the rental base was constant this year because of this index, but little by little we remove the discounts that we are carrying since the pandemic, since the return to the operation. And finally, offices on the right-hand side of the graph, no volatility in the result this year. The quarter represents a drop of 5%, and in the year, a drop of 2%, closing the year in 34 million. NOI 23, and the impact was important in linearization of discount and grace period last year in minimum 10, 2 million. Excluding this effect, we have a growth underneath the inflation 3%. Talking about EBITDA operational result, without surprises in cost and expenses, NOI growing. And naturally, we have an interesting impact in adjusted EBT. In the quarter, we grew 32.6%, almost 50 million in EBITDA, and in the year, 173.8 million EBT, growing 11.6%. And this we are going to show more ahead. There was a positive impact leverage the company. About adjusted financial result, in the quarter we closed with net expenses of 19 million, aligned and better than last year. And in the year, we closed the year with a drop of 16.4% in net expenses, closing in 95.6 million. And basically, the most relevant effect is our work in amortization that we have been doing since the end of 2021, 2022. There was also prepayment, and 2023, we pick the fruits of these amortizations without variation in our debt. And in lower scale, it's going to be more and more meaningful, the impact of the beginning of central bank interest rate cut and a positive impact in lower scale for this year. I believe we are going to see a drop of this financial expense because of Selic is dropping now in 2024. And to conclude the results, adjusted net profit 12 million compared to 3.4 the previous year, an expressive growth. And in the year, we conclude with 11.5 on profit, compare a loss of 15.6 million last year. And these two effects, the effect of growing NOI at the malls especially, and the work of managing the liabilities, especially in 2022, with good results. FFO excluding depreciation, we reached 21.6 million in the quarter, a growing of 53%. And in the year, we conclude with 48 million compared to 20 million last year. The growth is 134%. Moving to talk about leverage and indebtedness, I'd like to heed your attention, especially total debt and adjusted EBITDA pro forma. In the first table, we conclude the quarter in 4.4 times, compare 5.25 times in the previous quarter. And here we see the impact of growth, all the development growth, leveraging the company, and this is a natural trend that is going to be ongoing. It doesn't matter the transaction. I believe the company will leveraging with the development. And in the underneath table, financial covenants according to the contract, IFRS consolidated of SYN, not only pro forma. Also, we have 4.5 times compared 5.3 times previous quarter. So we have interesting room for covenant, 7 times the limit. And another covenant that is also important are The assets and net corporate, we have room that is very interesting, closing the year 3 times, and the limit minimum is 1.4 times. So we are nice on the financial covenant. And to conclude this session, the financial results, we show that the amortization timeline has not changed in the last quarter. There is no pressure on amortization that is important in the next 12 months, just 5 million to 2024, and this amortization for 2024 is concentrated on the second semester. We have more than 12 months, in fact, up to the amortization that is relevant. And on the right-hand side, our indebtedness is the same, almost 40% IPCA. The spread is 6.5 and 60% in CDI, and the spread is 1.5. So we have a profile of debt that is comfortable, aligned with our cash generation. I believe in the moment that we have to re-leverage to pay these amortizations, we are going to have a company that is levered lower in a good timing. And we move with the cost that is very low of indebtedness, very competitive. Now we can open up the floor for Q&A section. We are going to start the Q&A session for investors and analysts. If you would like to place your question, click the button, raise your hand. If your question is answered, you can exit the queue by clicking on lower hand. If you would like to ask a question in writing, please enter in the Q&A field, followed by your name and your company. Please wait, we're collecting all the questions. The first question comes from Gustavo Cambaúva, BTG Pactual. Hi, good morning, everybody. I'd like to ask 2 questions about the transaction that you announced. The first, you can talk about the status and the procedure to conclude the transaction, preceding conditions. You can talk more about what you are overcoming and also an expectations of a timeline to conclude these asset sales. And my second question, if you have a definition, what's going to be done with the resources connected to this table that you showed about indebtedness. When the transaction is concluded, the company will have a surplus of cash that is very big. My question is, if you define the volume that is going to be distributed as dividends, or it's going to be reinvested in the business, in some specific assets, if you're going to observe M&A, to understand how this resource is going to be used when the transaction is concluded. Thank you so much. Thank you, Cambaúva, for the question. We are going to clarify many questions with your question. So good reflections. You bring the first one. We had this negotiation in a very fast way. We have just signed the MOU. What's going on right now? We starting a diligence that in the end of the day, even if it's a bigness with this, it's going to multiply by 6 diligence, the right of way of partners. This is the first point, is XP understand the structure where these assets, the SPE, the partners, who they are, in order to start in parallel running technical diligence, engineering. And I believe that in the following 2 and 3 weeks, we are going to see this going on so people know well the details of the development. About a timeline, we expect by the middle of the year, solve the diligence, signing contracts, and in the middle of the way, it all depends on the right of way and approved by CADE. This is not exactly our authority, the timing, but the sooner the better. And about the resources allocation we are going to receive by December next year, 1,850,000,000. And first, we want to focus on executing the transaction. There are two. There is a swap as a preceding condition, so we can conclude in the same format that we agreed with XP. And then we have not decided, not yet. What is probable is to have a mix of both payment of debt that the company is with the leverage closer to the other players. And this healthier balance, it doesn't matter what we distribute on dividends, we are going to be comfortable to be back on business. So we can leverage to buy assets, to have a consortium with other investors in order to purchase something bigger. But we're going to have room in the balance in order to go for M&A. And our idea is exactly to follow this strategy through for many years to be more asset light and start with an investment 15-20% managing the assets with partners and investors that are strategic with us. So that's our mindset here. Probably it's going to be a mix of both scenarios. And the percentage of this scenario we are going to announce timely as we take this decision. That's perfect. It's clear. I have a follow-up question about investing in more things. As a concept, I'd like to understand what is the class of assets that you are observing, because you have a big sales on offices and it was concentrated shopping malls. Now you are selling shopping malls. You balance more. I would like to understand what you are excited about doing, shopping malls, office buildings, or get back to warehouses. I'd like to understand what is the class of assets that is in your higher interest right now. I believe that shopping malls and offices have the same importance in our preference. A warehouse, not so much. Warehouses, depending on the opportunity, investing together with SPX, JV. And I believe that we are going to see good opportunities for office in the next 12, 18 months. And shopping malls is always strategic. The higher the platform, the better. You have important gains of scale, commercial, strategic gains. So these two classes of assets have higher importance. Warehouses depend on the opportunity, punctual business. That's great. Thank you so much. Have you all a great day. Thank you, Gustavo. Good morning. Next question is the investor Reinaldo Francisco. So proud, one more profitable quarter recently. That is a relevant fact informing sales of quota at the malls. With these sales, is it possible to close the quarters with the recurring profit in the next results? Hi, Reinaldo. Thank you so much. Good morning. Thank you for your comment. These MOUs that we signed, the contract of swap and the MOU, do not impact our results, not yet. Until they are concluded, accounting, they do not have any impact, and the revenue of these developments is not going to the buyer, and the swap is not with us, not yet, as if nothing had happened until we close these operations. And after the transaction, pre-transaction, we see that the company is having an interesting recovery on the results. So we see 2024 better than 2023 on result-wise. After the closing, we should see a company equally profitable, and we are going to be lighter on our debt. That is the biggest problem of our result is leverage, so we should not see some kind of worsening or decrease of our results. Because here we have a good management on how we have on NOI and the financial result when we pay debt. I would say that the scenario is pre and post is good. They are better than what we have seen so far. Thank you. Next question is Diego Alves Pinto, investor. Any expectation, sale, renting, swap, or any other destination for ITM? What is annual expense? Thank you for your question. ITM is an asset that is very specific because it's old, it's big, 45,000 ABL, and we have 20,000 in the real estate fund. To understand the structure, different from the other developments, we do not have a control on this development. We have a majority in a fund, but that is condominium and other partners that hold 25%. The decisions are slower than what we are using to taking when we control the development SP or in real estate fund. The expectation over there on rental is low. We do not have demand on the size that we want to occupy. It's a trade-off. You can occupy a development of 45,000, you rent 2,000. It's not worth it because you have to reactivate a condominium and that's expensive. And then you have a minimum critical mass. So you can start renting in ITM. What we have been studying on ITM are changes of use. We are studying the class of assets that you imagine to extract the best value out of that development. We have been studying with advisory companies. We provoke the market to understand the demand. There is no expectation short term to solve the problem of ITM. But we have good alternatives that we have been studying. The execution is hard. It's a change of use. We need to study permit. We need to have the demand, but the takeaway message that it's not forgotten. We are going to focus on solving. This is our biggest problem on vacancy, is ITM. So we are aware and focused on solving its occupancy. Thank you so much. In order to ask a question, you click on raise hand or send a text using Q&A, informing your company and your name. Please wait, we are collecting questions. One more time, in order to raise a question, you click on raise hand or Q&A, inform your name, write your question. Please wait, we are collecting questions. Next question is Leonardo Andrade. What is the accounting impact in the profit if the most transaction is fulfilled? I'm asking in order to have an idea how much we have free for dividends. Thank you for your question, Leonardo. In this transaction, first, we do not have price allocation per asset. The reasoning of the deal was global price and the profitability for the fund, considering the paid price. So we went from macro to micro. We arranged the transaction good for both. And then, of course, we have an idea on how much the cost will be because we have the percentage of every development. And then the tax changes depending on price allocation, and this depends on the buyer. We estimate an estimate number that 30% of the transaction is 30% of gross margin of this transaction before taxes, before any other accounting effect. If you consider the cost compared to what we are selling, we see a margin 30%, conservative 35%. A conservative number just for you to have an idea on the specific profit in this transaction. And then the dividends to be distributed, it will depend on the moment when we conclude the transaction, in the moment what's going to be worth doing. We have mapped already all the possibilities on what to do, but we are conservative, focusing on the execution of the business first in the next month, and then in the right moment, observing the macro situation of the country and the opportunities in the future, we take this decision and submit to the shareholders' approval. Thank you so much. If you want to place a question, raise your hand or write in the Q&A field. Please wait, we are collecting all the questions. Next question is Marcelo Luis Santiago's investor. Good morning. In the strategy of the company, is there a possibility of divesting the assets or even migrating to a structure of real estate fund seeking higher efficiency and recognition of value from the market? Good morning, Marcelo. Thank you so much for asking. About the total divestment, the company, the focus of the company is to be asset light. This means that we still have assets. The company is not planning any type of liquidation or total divestment. And that's why we always place as a condition on our deal, except some specific case that we do not control, we do not manage. But that is an important point in the negotiation. We keep the management of the assets. And this choice of total divestment has a low probability. It's remote. What we are excited, always observing opportunities, generating value to the shareholders. That's what we are going to do if we execute all the transactions. And then clear space in the balance so we can be open to M&As in the future. So plan A is to increase the return on invested capital. What we have been doing with this divestment is still holding part of the development with certain control, managing it with voice in the governance of each development. And I believe the main point of the strategy is to continue using this structure. Real estate fund. Today, with the enforced taxation, we do not know what comes in the tax reform. We do not know for sure. But within our structure, this migration has a high cost, CBI cost, and you have high cost on capital gain as well. So we always assess this possibility of migrating of company to a real estate fund, but the payback is low normally because the operation of the fund is more expensive than FP, but the gain capital is going to be a decider if we transfer to a different cycle plus ITBI that you pay. We do not see room, not now, generating value or with a good return to migrate this way. So probably we're going to keep on working the same societary structure that we have currently. So if you want to ask your question, you click in raise hand or write your questions in Q&A with your name or company. Next question is Eduardo Salmas Conceito. Good morning, everybody. How are you? First of all, congrats on the transaction. Congrats on management. I am a shareholder for a long time. I'm so pleased, as usual, and proud to be with you. My question is the following. I think it's very good that during the transaction, you saved 60% of Cidade de São Paulo. It's an asset as valuable as gold. And you said that it was about to be expanded. About this project, it's been approved or not? That's a question that I have, that I do believe in this asset. On top of that, I would like to hear about Brasílio Machado. Have you solved? Maybe you mentioned it and I got lost. And my final question, a while ago you purchased 10% of Condocom. I would like to hear about that. Thank you so much and congrats. Thank you, Eduardo. Good questions. Let's see. I will start by the final one, Condoconta. We purchased 10% of Condoconta. It's a bank for condominium. And then what happened after the high interest rate, we pivoted the strategy in the first point. We reduced the cash burn that a startup has radically, focusing on the core of the company, the banking services and revenue. And then we experienced a period of stabilization on cost and started following the revenue. Our perspective for this year is a break-even in Condoconta by the end of the year. And we see expressive growth in number of condominiums. We grew twice the number of condominiums last year, and this year we hope to triple that. So it's an investment that we are very excited with the big size of the market, 500,000 condominiums in the country that are not well served. That's the part of Condoconta. The second question is Brasílio Machado. We provided all the documents in the city administration. We are in the regulated term for the city administration answer us with the permit. So everything is going well with Brasílio Machado. And the first question was Cidade de São Paulo Mall. Great. Cidade de São Paulo, the construction work is approved, pending for approval with the other participants of the condominium. If you remember, there is a mall, and in the same land was developed also corporate building. And then the expansion considers common area between the two condominiums. So we are going to determine the arrangement, the governance, and all the aspect of management of this part that is a common area between two entities, mall and office buildings. So the construction work is okay, everything is correct, we are doing the project already. And this aspect of negotiations with the other part, the office building is about to be concluded. So this expansion, we estimate to start the work this year, second semester. And the opening would be in 2024 in the end. What I mean is the end of 2025. And what is the increase of area to be rented? The mall currently has 17,000 meters. We increased 25%, 4,000 meter extra area. That's nice. We are so excited about it. Based on your comment, the portfolio that we have after the transaction at XP, when you conclude, is a portfolio with 70% of increase on productivity, NOI per square meter improving 70%, because we concentrate in Cidade Mall, concentrating the operation in São Paulo, 60, 85, if I'm not wrong. So we have a portfolio with more value because of this mix, better mix. So the snapshot is much better in this portfolio. That's the point of view that is positive, the transaction. Congratulations. Thank you so much. Thank you. Good morning. The Q&A session is over. We would like to pass the floor to Mr. Hector Leiton for his final considerations. Thank you so much for your interest in our call. 2023 was a year that was very good to us. We had good results in our operation, the shopping mall with a robust growth, all the corporate buildings well managed. There was no triggers on growth in the buildings, but the evolution is very interesting, and 24 is going to be a better year for the corporate buildings as well. It doesn't matter the transactions. Our core here is to value the developments, and this valuation comes from our management. Teamwork on making this development more attractive for the clients, shopping mall clients, the tenants of warehouse and corporate building. That's the differentiation of our company from the others, bringing a specific stamp on our portfolio. In addition to the brick we offer, we provide services excellently. I'd like to congratulate SYN team for the work you have been doing with competence. And thank you so much. And I wish you all a good day. Thank you so much. This SYN video conference is over. We'd like to thank you so much for your attendance. Have you all a good afternoon.